This is Adrian Manz. I'd like to invite the viewers of Stocks and Sectors on the Radar to join me live at the International Traders Expo in my hometown, Los Angeles, California, on June 5th, 2009. I'll be providing a one-hour workshop on my intraday trading style starting at 5:30 p.m. If you can't attend in person, registering for the expo will give you free access online to both the live and recorded event. To join me, go to the TraderInsight.com homepage and register by clicking on the Traders Expo advertisement. This event's a great place to learn about my style of trading, and best of all, it's sponsored by the Expo and TraderInsight.com, so it's totally free. I'll see you at the Expo.
From Los Angeles, TraderInsight.com presents Dr. Adrian Manz in the war room and at the helm with today's look at stocks and sectors on the radar.
For TraderInsight.com, I'm Adrian Manz, and this is Stocks and Sectors on the Radar for Wednesday, May 13th, 2009. On Tuesday, Dow Jones Industrials up 50 and a third to close at 84.6911. We had 1,274 stocks advance, 1,749 decline, and NYSE total volume at 1.61 billion shares. All the indices tried to move lower, none of them did it. Dow Jones Industrials got down there, tried to test that 8360 level, no dice. S&P 500 tried to retest 850, no dice there either, down just fractionally on the session to 908.35. NASDAQ 100, NASDAQ Comp both tested the 20-period simple moving average, both managed to close above it. The 100 was down 18.39 to close at 1377.40, and the NASDAQ Comp down 15.32 to close at 1715.92. The Chicago Board Options Exchange Market Volatility Index, the VIX, was down another point to close at 3180. That indicates that some of the uncertainty is out of the market, and probably also is indicative of the fact that a lot of traders bought some puts when they put on those positions last week. That's why the markets are holding up. That's why the indices are staying pretty steady in the face of some selling. We're not seeing a panic sell-off. People have their positions protected. That's good for the market, good going forward, and probably a good indicator of the price action for the rest of the week. One thing to keep your eye on is that retail sales number. Probably not going to look real good. Walmart's probably not going to look real great. If that all comes in sort of in line with expectation, probably won't have a big effect on the market. If something's out of whack, we might see a nice pop to the downside. But for the time being, let's just focus on the market sort of holding at these levels and try to find some trades that capitalize on that. Let's take a look at the stocks we had on deck for Tuesday and then look at 4 stocks I've got on the radar for Wednesday's trading. Hartke Hanks Incorporated, ticker symbol HHS. This was a switch hitter long side entry at 875 with a 905 target. Obviously, as we see here, stock gapped higher, immediately started trading lower. No entry on HHS. The other one that we had was Ruby Tuesday, ticker symbol RT. This was a short with a 675 entry, a 640 target. Intraday today, it stopped just shy of the target. We have a good example of intraday trade management on this one. Here's an intraday 5-minute chart. If you had this 675 entry in here, you sat around for a while waiting for the stock to do something, consolidated, started moving lower again. On these discretionary trades, this is a real good place to put a stop loss just above this 5-minute support and resistance area. Once we got down and broke through the first support and then didn't move any lower, this moved back up through S1 was the indication for Julie and myself to take some money, to take some profits off the table and see if maybe we didn't get another entry opportunity later in the session. That did happen, came down, once again had trouble at S1. That's all the indication that we needed, that the stock was probably pretty well exhausted right around that 660, 662 level. In any case, nice little profit on the trade, not everything that we'd been looking for. The intraday trading plan setup, of course, did go all the way to the profit target. So good trading day anyways. Now let's take a look at 4 stocks I've got on the radar for Wednesday's trading session. Once again, based on the intraday price action that we saw on Tuesday, the setups for Wednesday fall more into the category of scalp than they do into the position trading kind of a setup. First one on the list, AES Corporation, ticker symbol AES. This is in the utilities, independent power producers and energy. Switch hitter pullback, trade above $9.20 per share. Have me interested in an entry with an initial profit target up around $9.50. Harmony Gold Mining in materials, metals and mining, ticker symbol HMY. This is a line drive setup. Trade above $11.03. I'll be looking for an entry opportunity with an $11.33 target. Millipore Corporation, this life sciences, tool services, healthcare, ticker symbol MIL. There's an infield fly setup, didn't really get up and away the way we normally like to see it. Gonna watch it anyways, trade below $65.75 per share. I'll be looking for an entry opportunity on weakness in the broader markets with an initial target down at $65.35 per share. And finally, in oil and gas consumables, this is an energy. I've got Veneco. This is a switch hitter pullback, also sort of a 3-2 pitch setup. If I see trade above $6.71 a share, nice little scalp entry on this one with an initial target up around $7.01. If you have any questions, shoot me an email, adrian@traderinsight.com. Use protective stops on every trade and have a great trading day on Wednesday.